Hello, Marc Ostwald from ADM Investor Services International with something slightly more alternative to what I normally talk about, which is India's economy. I think it's safe to say that as much as we are worried about what's going on between the USA and China in trade terms, we always thought that at least there would be one bright spectre in the global economy, and that would be India, and that has not proven to be the case. As we can see from my first chart, we've seen nothing but a very rapid slowdown in Indian GDP, which was originally projected to be around 7 to 7.5% for this year, and will be lucky if it actually gets to the 6% that most people are projecting. So exactly what's happened here? Let's have a look at the next chart, which is the by sector breakdown. What we can see there is the service sector is doing okay. Unfortunately, the other sectors, particularly manufacturing, has done particularly poorly, which has slowed down very sharply. Admittedly, there have been some quite big spikes in manufacturing up and down over the last few years, but at the moment it's in a fairly bad place. Agriculture also not doing particularly well, and given that that constitutes around 12% of the economy, manufacturing about 33% of the Indian economy, all is not too good in terms of what's going on in India. So what else are we seeing in India? Well, first of all, let's have a look at auto sales. This is obviously a global phenomenon, but there's probably nowhere worse than India. And the bad news here in terms of India is that the Indian automakers and their supply chains employ roughly about 33 million people in India, and there are a lot of layoffs going on. In part, this is due to the global phenomenon of weak auto sales, but it is also due to a very sharp rise in unemployment, as we can see in my next chart. As we can see there, over the past few years, we've basically seen a very, very steep rise in unemployment. 7.8% might not sound particularly high by international standards, but an economy of which is 1.2 billion people in size terms, that's a lot of people who are unemployed. It is also a 45-year high, however much the government tends to dispute the data because their unemployment data is not collected as well as elsewhere. And as one can see, it's not only rural unemployment, but it's also urban unemployment, which we're seeing not doing too well. So, what's been done about it? Obviously, we've had this big budget in India, but that's going to run the risk of actually increasing the fiscal deficit to around 4% of GDP. And in overall terms, we're sort of looking at the Reserve Bank of India as our great savior. So looking at that point, what we're thinking about is how much impact has all the cumulative cuts that we've seen from the Reserve Bank of India actually had. So we come to my fifth chart, that is that sharp rate cut, those sharp amount of rate cuts that we've seen this year. As one can see, they've cut consecutively at the last four meetings by 135 basis points. But in terms of the economy, as we've seen from the previous charts, it's not actually having much of an impact. Why? So that's my final chart, and the reason is very distinctly here. India's non-performing loan ratio has risen to 11.2%. That is the worst in the world. Unless something is done about it, and very, very soon, and it will have to be done in a draconian fashion, then India is basically not going to recover regardless of whatever the RBI does.